Hi, this is Randy Finney with Right Side of the Chart, and today is Friday, June 21st, 2019. In this video, I want to dissect a trade idea. I'll post this as a trade idea. I'll probably just include this video below the trade idea. Going through the charts last night, I came across a few new trade ideas. I want to get some setups out to you guys, both bullish and bearish, whatever I come across, and then let you guys decide what to take. I know the trade ideas have been very light. It's where it has to do with where the market is. I'm not comfortable on the long side, but again, I'll look at beaten down trades or trades that are in an uptrend that are strong, have strong charts. Those are out there. But I'll also share some short trade ideas. And remember this, that not all stocks go up and down with the market. So it's at any given point in time you can trade stocks long in a bear market or a downtrend, or short stocks in an uptrend. You just have to pick the right stocks in the right sector. So with that being said, this chart is just bursting with a lot of things that jump out to me, this is we'll go over two time frames here, the weekly and the daily, and I'll share over 15 almost 15 years, almost 2 decades of history that I have trading, technical analysis, things I've learned over the years. I can convey to you in this chart within 10 minutes here or less. All right, so we're going to start out with the weekly chart. The stock is PAYX, that's Paychex Inc. So what stands out here? Maybe we'll start from the top down. Okay, so we'll start up here, and you can see we have the usual things that I like to look for in trades, which are divergences. And in this case, I've just marked up the divergent highs. We'll get to the daily chart in a second. I'll show you divergent lows, which are good indicators that you're going to have a reversal and get into a trade on the long side for a trend trade or a swing trade. So it's pretty simple stuff. You can see here you have the divergent highs, and as I always say, divergences in themselves are not a sell signal. So that's where we're going to zoom down. I use a weekly chart for a couple things. Number one, to confirm the analysis or refute it, if that's the case, that I'm seeing on the daily chart. In other words, what I mean by that, if I see some bullish developments or a very solid support level, let's say on a stock right here on the weekly chart, just below prices, and then I see what may be a bearish development or chart pattern on the daily chart, I may hold off. Why? Because if that bearish development or chart pattern breaks down on the daily, the stock could hit the more important long-term support here on the weekly chart and then reverse and foil that trade. So I always look at multiple time frames, typically, and sometimes I'll go out longer, but usually the weekly charts, daily charts, and 60-minute charts. All right, so that's one thing, and these divergences play out. And the takeaway from this, look, if you're not an active trader, you're just an investor, these divergences work every bit as well on weekly and monthly charts, and even 60-minute and all the way down to the 1-minute charts. So things like that, you look for the negative divergences to portend a likely trend change. They're just signs that momentum is waning. I don't have all the divergence lines drawn out. If you're new to the site, I didn't want to clutter the chart up too much, but you can see if I have a line here with prices making a higher high, you look down at the indicators below, and what you'll see are the indicators making equal or lower highs under that same point like you have here. So again, they're not all marked out. These drops are pretty big. I didn't measure them all out, but the bigger drops are all around close to 20%. So the other takeaway is, when you see bearish developments or a bearish chart pattern, things like divergences, trend line breaks, long-term trend lines on the weekly chart, they set up the bigger trades, the longer term trades. You're not going to go long or short a stock based on a breakout of a weekly chart pattern for a swing trade that's only going to last a few days. No, these trades will typically last weeks to months, sometimes even years, depending on what you see. So that's some of the takeaways there. And let's move on down to some other things. All right, so what I have down here below are arrows. First, we'll start with the PPO. And what I'm looking for on this stock, or what stands out to me, I should say, when I look at this stock, not every stock, but this one in particular, is a pretty clear pattern. If I didn't make mention, this is a decade-long chart right here. This goes back 10 years. And what I look for, what stands out to me on the PPO indicator here, are these what I call high-level bearish PPO crossovers. High level, because this is your zero line right here, down below the dotted line. And so when the PPO is above that, it's in bullish territory. The PPO is not a bound indicator like the RSI. Typically, the RSI is bounded by 0 at the bottom and 100 on the upside, although it usually never gets to either of those levels, but it is a bounded indicator. Whereas a PPO, there's no bounds to it. It can go up to anything. So high level is relative, is what I'm trying to say, not a particular value. RSI, you have hard values. Anything over 70 on the RSI typically is considered overbought, whereas anything 30 or below is considered oversold. So you can just see by looking at it, whether you're using a MACD, which is very similar to a PPO. I prefer the PPO here, especially on the weekly time frame. Look for these high-level peaks. And then what I also like to see is what I refer to as clean separation in the line. You can see how there's clean separation between the PPO line, that's the blue line, and the signal line, which is the 9 EMA. And so once you start rolling down, particularly at high levels, number one, on this stock, as you can see, more often than not, and there are exceptions to every rule in trading, there are no certainties, and that's why we're going over this, because we're gonna scrub this trade with multiple signals, not just one. So for the most part, when you start turning down, it's pretty apparent you're going to get that bearish crossover. You can see I've marked them all there. Once the PPO line tops, its slope changes, the line turns down, and with very few exceptions, I'm just marking, you had the cross. You had some whipsaws here, so I will point that out, that there are periods on any stock where certain things may not work so well. Now, with that being said, if you went through and you went and looked at all the crossovers, well, after you had the first whipsaw, that's when you start to back away from it. You might have taken that signal again because the pattern was in place, but after it crossed back and then went back up again, at that point, stand back. Don't use that for a while until the stock returns to its normal pattern. And so again, we'll call that whipsaws. But again, right here, I wouldn't have shorted that stock based solely on that, because we had a pretty clear uptrend line right there. And what happened is we went on to build the divergences right there. As you can see, the divergences marked. Then we had a sell signal right there. And that was, I didn't measure it out, probably a 10% or more drop from the highs right there. So again, there are other confirming signals. All right, here what I did is every other crossover, as you can see here, was very clean. What I did, the arrows show where the lines crossed. So I'm just going to kind of come down there. You can see clean, high-level crossovers. And again, for me, a 10-year history with what is that? Close to about at least a dozen or so signals, with only one period of really whipsaw signals. That's a pretty high probability. That's over 90% accuracy there. This one I marked because we had a little whipsaw, but here's the cross came about right here, actually. That yellow arrow was a little earlier. And I took a crosshair before and I measured right to the top. When the crossover came, I put it yellow because it's almost a whipsaw signal, but it really wasn't. You still had an 8.17% drop, which on a swing trade is pretty good. So it wasn't really a whipsaw signal. It just crossed again. The stock made a new high. Then came a second bearish crossover on the PPO, and then came a big drop, which again probably was about 20% from the highs to the lows. So again, just a very good track record looking for that, and here we are today, and that's why I'm doing this video. That's the first thing that tells me this stock is probably going down soon. If history repeats, we're looking at anything from about a 10 to 20% drop. Actually, I'll give you my target now. So here's another thing that I pick up on this chart. Any stock I look at, I'll my mind's eye, I'll usually immediately see trend lines, and then I'll check them. I'll just grab the tool there, add a line underneath, and if it fits, and the more reactions you have, the more valid the trend line is. So in this case, our trend line starts here off the mid 2011 lows, comes in and has multiple reactions, or very close to reactions along the way, a little whipsaw here, and once again, here's another takeaway from this chart. I often say this. Anytime you're trading off a particular time frame, you want to use the candles on that time frame to trigger buy or sell signals. For example, I said today, if the indexes break those 60-minute charts, you want to see ideally a 60-minute candle close down below. Otherwise, you're going to get a whipsaw. This is a weekly chart, so this was not a false sell signal. What happened here is intra-week, the stock traded down below the trend line, again, pretty well-defined trend line, and managed to close the week back up above that trend line there. So that's why you don't jump the gun on a weekly chart, or for that case a monthly chart. I'm still waiting to see how this month closes. There were some bearish engulfing candles last month on the indexes. Will they be taken out this month? Maybe, but we won't know for another week or so here, a little over a week. All right, so that's a lot so far. And then finally down here is the RSI. As I said before, most stocks are, a reading of 70 or more is higher. I will also say this: when I look at certain securities, I'm not a one size fits all, or well, because everybody, the textbooks say 70 is oversold and 30 is oversold, 70 is overbought. In some stocks, when I look at it, if I see big runs up to the 80 level plus, and very often what I'll do at that point is I'll put a trend line there, or a horizontal line I should say, and to me that will be the overbought level, not just 70, because that's a number that many stocks do hit overbought. So just keep that in mind. On this one, 70 works well enough, as it does on most stocks. And here's something that I've developed over the years, and I say this often. You've probably heard me say, if you've followed me for a while, 100 if not 1,000 times over the year: overbought is not a sell signal, just as oversold is not a buy signal. However, overbought is an indication, hey, the stock has gotten ahead of itself, and is probably going to have a correction soon. At the very least, your risk reward, ideally you want to be buying stocks when they're oversold. And again, this is longer term charts here. Trend trading, even swing trading, ideally. This stock never really gave you a 30 level because it's been in a strong uptrend now for years, for almost a decade here. But again, if you look at history and you look at every time the stock was overbought, here it had an extended period of being overbought, but again, that ended with divergence. And then finally there was a correction, but in most cases it was a one and done kind of thing. You hit overbought and you had a correction. You hit it again. That second one was a second tap of the overbought level, and then the big correction set in, probably 10-20% or whatever it was there. And sometimes you just get kind of what I call a one and done overbought reading. However, I'm going to take it a step further. What I've learned over the years is, the closest thing there is to a sell signal on being overbought is not the fact that a stock hits or crosses above 70. It's when you are above the 70 level and then you cross down back below, that is usually your sell signal there. So in this case, and I probably should have put another arrow here, I'll do that right now. Well, we had a few crosses up back and forth. Again, this when you start seeing the indicators flatten out like this and cross back and forth, then you'll want to see something like divergence set up. So I'm not going to put an arrow right there. But in these cases, what I did is the white arrows, either when you cross down, or the yellow arrow here, when you cross back down below the 70 level. Here, let me try to put crosshairs and you can see what I'm talking about. So we came above 70 right here, and we crossed down about the point right there where I have the arrow. Let's just say right there. And you can see shortly after that the stock fell. Here we were very overbought. We did cross back down below there. The stock happened to go up a little more, but it never exceeded that previous high. You zoom in right there. That was the high, that first overbought reading. We came above it again, but boom, crossed down below. Then the correction set in. So again, those are things to look for, and that helps. Like right now, for example, we have an extended overbought reading. We started to become overbought right about here, and the stock has remained overbought. So at this point, confirmation will come. Now I'll probably be short the stock before we get it. I'll show you why in a second on the daily chart, but confirmation will come when we cross back down below that 70 level. Confirmation also on the sell signal will come when we get the bearish crossover. But this stock, like I said, very few whipsaw signals. Once those lines start to turn down, again, very few. Not to say it can't happen. So that's it. Those are multiple things that confirm the case for a longer term trade. And now the takeaway on this is also, because this weekly chart, because I see a history of drops ranging from about 10 to 20% on this stock, and at this time we have an extreme. This is about the highest. It is the highest the PPO has ever gotten, going back over a decade. It could be in the stock, probably in the stock's history. I believe that is the history of the entire stock. It's never been, the PPO hasn't been at this high level, and we're pretty darn overbought, as you can see from this run up. So what that's doing too is telling me okay, if I go into this as a short, I'm not going to look for a 5% pullback or a 7% pullback. I'm going to look for I'll tell you right now what I'd be looking for most likely. On this weekly chart, a pullback to the trend line. We haven't visited that trend line in a while. That's what's keeping this stock in a bull market, and you know, that would be even a bullish scenario. That's a 20% drop. It's saying, let's say the stock comes down and it still remains in a bull market. It's poised right now for a 20% correction. It hasn't visited this trend line in a while. Every time it gets, you know, it looks to be about a certain distance. You could probably put a price channel right here. It comes on and comes on back to, you know, to recheck that trend line. So that would be, based on this chart right now, my preferred swing target, and that's about, as I showed you, about a 20% drop. Of course, depends where it hits it. Trend lines are dynamic. You know, if we hit it soon, it's a little more than 21%. If it takes a while, it's a little less. All right, now to the daily chart. And you know, again, the same principles apply. So we'll go through this a little bit quicker. I look for you know, trend lines when we have an uptrend. And this stock does a really good job because it has a lot of reactions to help validate those trend lines. I always say the more reactions, meaning the more candlestick bodies and or shadows, you know, the fat or skinny part that touch it, the more valid it is. So we have numerous reactions there. Came in, a few candles tested it here again, and we had a breakdown here, a little bit of whippy action, and then we broke down and back tested. Sometimes you break down. You know, I've heard people on the site before say, oh, wait, you know, stocks always backtest. No, they don't. You don't know when they're going to backtest. So that's your first objective short. Sometimes they backtest and sometimes they don't. If you're waiting for a backtest there, you missed out on, from the breakdown to the lows, you missed out on a 16% drop. And in this case, we did backtest. So the takeaway here is this stock trades well to the technicals. You have these well-defined trend lines. You can see all the reactions along the way, and then once it breaks down, that sets up the short trade. You right now, this is where, you know, it helps to hone down on your entry, the weekly chart, because it can take a week, and in 1 week sometimes these things break down. If you waited a week right here, well, I don't know, it depends where in the week. I'd have to look at the days right there, but you might have missed out by the time that weekly candle gave you a sell signal there. So the daily chart will get you in a little quicker. There are some whipsaw signals involved sometimes, and we're going to get to that in a second. But again, so we're looking at the trend line. There's a setup, and then finally, not just an uptrend, because the thing about trading is an uptrend is a stock, and it's bullish. It's in an uptrend. I mean, it speaks for itself. So what many traders will do, myself included, you buy a stock on pullbacks to its uptrend line, and you're paid off. You're rewarded well. You buy the dips back to support. That's TA 101. However, what makes, you know, at some point, I'll look at a trend line and I'll no longer be interested in buying pullbacks to that support. I'd rather wait for a sell signal with a breakdown. And what is that? That's the divergences, and that's also the overbought nature, an extended run. And you can almost look at this stock and just kind of visualize each of these trends have somewhat symmetry. This one's a little actually little stretch would be an understatement, very stretch. But you can see there's almost, you could almost put cycle lines here. Every so often, even though this stock is in a primary bull market, it needs to take a breather, and these are cycles. It's, you know, has these uptrends, corrections, and a longer, you know, very tradable corrections in a longer term bull market, and so that's what we're looking at now. Okay, so the negative divergences with prices making higher highs give you the heads up, and you can see, and there's different time frames here. Here's small divergence right there, small negative divergence, right, and a small wedge, nice little bullish rising wedge pattern, and boom, nice trade. It might have only been 4, 5, 6%. Small wedge tells you, and if you didn't have confirmation on the weekly chart, tells you that's a get in, get out kind of trade. And then it set up, we went up a lot like the stock market now, had divergences, had a little correction, but it continued to push up and only extended the existing divergences that were already in place off this point here. And then that set the stage for the bigger drop. And from highs to lows, I think, again, I already measured about 19%. Yeah, about 19% drop. And not all stocks are bearish, not all divergences are negative. These are bullish divergences. These tell you when the trend is likely to change, when the correction's over. So you can see this is 2 years of history. There have been two big corrections in here. Both of those corrections were identified well in advance. You were able to get in short, and you were also able, if you wanted to ride that trade out, at least on this stock, the correction didn't end until we had bullish or positive divergence. So there's the takeaways, and again, you can use these on multiple time frames. Finally, what stood out to me as well when I took a look at this stock is something a little bit suspicious. Again, it just pops out to my eye. I notice at the tops, and you can see these white arrows, all the white arrows, something odd happened. Not odd. I've been traded long enough to see this. These are what I call stop raids. There is manipulation in the market. I'm not a big conspiracy theorist, but I can tell you that certain stocks are prone to it. In this one, there's a clear pattern. You can see all the big corrections that followed those arrows, all of them. Even little drops, and you see these wicks, see these candles, these huge up candles. You can call it a buying climax, but in each case you have this big wick, and that's a big move up. What that means, when you see that wick up top, the skinny part, it means intraday that stock ripped and then all of a sudden reversed and they faded it hard. So what would have happened in this case when I see this chart, had I been trading at the time, and I wasn't, I didn't take this trade, I just looked at the stock now, found it now, I would have said, okay, short there, and I would have maybe added another, added to my short on the back test right there, because that is an objective entry. That's TA 101. You short the breakdown or the back test. What did they do? They popped it. So a well-placed stop, a logical stop, would have been right back above the trend line. They popped it. That's a big intraday pop too. And what it did is it served to blow out a lot of shorts that would have done the right thing, taken that pattern. That's a 5% pop, and then boom, then the stock dropped from there, from that point, from that high. That was about a 18% drop. Again, you can see these little wicks here, and again, the thing is, they come at the highs. You don't see a lot of those long, look through here, you don't see a lot of those long wicks, the skinny part, anywhere but at these peaks right here. So right here, and here's a breakdown. Well, you had a little false intraday breakdown. Again, like I said, here's one where we broke, the day before this thing broke down for good was right there. And it broke intraday, so you might have taken, it was a pretty good impulsive move down. You can see this candle where I'm putting the crosshairs here. Let me show you with arrows. So that's a short that I might have taken right then. But look, boom, they popped it up right afterwards. You had a big pop. That pop could have come early in the day. I'd have to check it, but it may have probably came after there, because you can see that candle closed back above there. So there was a little washout move, and then boom, then it came, broke down from the wedge the next day, and again about a 20% drop there. So that's why I put a question mark here. Are we going to get that? So the final takeaway from this is, if I see some kind of big, especially after a little whipsaw signal intraday break, I might hold tight if I do take the short, because that'll probably be the official trade criteria. You can't bank on these happening. And then if we get that, I just might be give my trade a little bit more room if and when I take a position in this one. Targets, well, as of now, we didn't break down yet, but from where the stock is trading, there's mild support. I may put a target here. That's about a 10% drop, and I would certainly have a target here. I know that doesn't meet the 20% drop on the weekly chart, but I would very much expect a reaction, and very much expect the stock to get there. So that's about a 14% or so drop from where we're at right now. But again, like anything, there's a huge difference between a trade setup and an active trade. A setup is just a stock setting up in a pattern that may or may not break out. Maybe these divergences get burned through. Maybe this thing keeps going. So your sell signal or objective short entry comes again on a break of the trend line, and how you take it is up to you. The benefit of taking a breakdown shortly after it happens, number one, you want to see that being an impulsive breakdown. What does that mean? Pretty good move through there, and ideally you want to see the stock dropping on 1.5 times or better volume. Not always necessary, but it helps. And so you can take that gets you the best entry price, but you also run the chance of taking a whipsaw signal like this right here, for example, where the stock snaps back up. And if you want to play it safe, wait for a daily close, a solid daily close down below the trend line there. And what you might do then is take an initial starter position on the breakdown and then add to that position once it becomes clear the stock has broken down and closed down below the pattern. All right, so that's it. And you can see one other thing that I didn't cover on the weekly that I meant to cover. Let me jump back to that. Is one of my favorite tried and true trend indicators that I like to use. There's a lot that can be taken from the RSI and the PPO, like I said, divergences, crossovers, other things like that. But one that I use, and is very simple and very effective, is the 9 EMA, the signal line, which is the white line, when on many stocks, and you just have to look at each stock. Don't assume it holds true for every stock or every index, but for the most part, when that white line is above the zero line, which I just colored there, the trend is bullish, and that tells you want to be long. And this is a primary trend. And so that line acts as support and resistance. Sometimes a PPO line will do the trick, but being that the signal line is a slower one, this is your 9 EMA, it's the last of the two to cross, and that's why I use it, because you tend to, it filters out, helps to filter out whipsaw signals. Now nothing's perfect. You might look and see, okay, we did cross there, but for the most part you can see this stock has just done a bang up job, or that indicator at least, by 99.9% of the time from this point on, remaining above the zero line. And when it's below, the trend is bearish. That tells you that the primary trend, and it was back then, that was a certainly a 20+% drop right there. And coming into that, it was also bearish to the left of the chart, and we were in a consolidation period with some big corrections. So longer term, where's the takeaway from that? Let's say this plays out the way I expect. We come on down to the trend line, maybe get a reaction, which would be my expectation on the initial tag, and ultimately break that trend line. At that point, if we also, the PPO drops below here, the signal line, that gives you a longer term, more powerful trend indicator, and tells you that this stock is probably, the bull market is probably over in Paychex, and it has probably entered a new bear market. And at that point, then buying the dips and pull back to trend line works in reverse. You start selling the rips, and at some point in the future you'll have a downtrend line, you may, in which to short rips back to on the stock. So a lot there, but again, like I said, I looked at this chart, both these time frames, which I like to confirm on a trade, and there's just so much that jumps out, and you won't see each and every one of these on every stock that you look at, but you might find some of these tools useful. And as I say, in trading, the more check boxes that you can do on a trade, if you're making a bullish or bearish case, the more check boxes you can put in the bullish case or the bearish case, the better off you are. But if you have a lot of conflicting evidence, you can make a pretty good bullish case, but you can also make a pretty good bearish case. Step away from it. I'll look at 100, sometimes 300, 400, 500 stocks at night or during the day. I'm constantly reviewing charts, and I'll pass on the vast majority. If the chart doesn't stand out as either clearly bullish or clearly bearish, move on to the next one. Trading can be tough enough. Try not to force the trades. All right, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.